This is Michael Waits, and welcome back to India Game Changer. We are joined today by Vishal Jain, the CEO of Manipal Business Solutions. Vishal, thank you so much for coming on the show. I really appreciate your time, and particularly doing it in person. This is my favorite way to do these recordings. Before we start, let's give our listeners a little bit of your background for some context, please.
Thank you so much, first of all, Michael, for inviting me.
My pleasure.
It's a great experience. I'm very happy to meet you and have a little chat about all your experiences. So quickly about myself, I've been a banker most of my life. I was in India till about 2005, working with multinational banks on the asset sides, then moved to Middle East. And Middle East was a very completely different experience altogether, continued with banking though. In 2013, when I came back to India, banking had completely changed. I was absolutely outdated. I mean, the way things used to happen when I was there was completely different from what was happening in 2014, 2015. India had made a quantum leap in terms of what they were doing, in terms of financial inclusion, in terms of public data infrastructure. And it was an eye-opener, actually. The India stack story had changed, transformed completely. Took me some time, actually, to get back to what's happening. And, you know, the great part was that all these challenges that we used to see in financial services, or because what India is per se, right? Everything had kind of become an opportunity with the inclusion of technology, with inclusion of different policies, welfare, and so on and so forth. Everything had become an opportunity. And what you see today, India, is actually building upon those opportunities.
So I want to get to this financial inclusion, which you brought up earlier. But maybe you can talk about a couple of the changes so people can get a perspective. Like, I've left my home country 30-something years ago, and I'm pretty sure that if I go back, everything is different. But even 7, 10 years being away, in a country that's as dynamic as India, when you come home, there are big changes. UPI was probably implemented while you were away, all these different changes. So maybe you can talk about some of the technical changes, and if you understand them, the government changes as well, that made it possible for everything to become an opportunity. Does that make sense?
Yeah, absolutely. So let me give you a couple of instances that will help you understand. Prior to all the data public infrastructure that we had, how things used to move was very, very physical in nature. So for example, if I want to buy a car and I have to apply for a loan, it was completely physical journey. Somebody would come to my house, get the form filled up, and then he would look at me, take my photograph, take photographs of all the documents, go back to office, manually scan all of that, screw through every document, take almost about 10 days to kind of decide whether Vishal Jain should be given a loan or not. And after that, it took another 15 days for the disbursal of the loan.
Wow, almost a month to get this done.
It was crazy. This is prior to when I left. When I came back, this entire process took only 5 minutes. That's the quantum of change that had happened.
And was this based on mobile technology?
Okay, let me take a step back, Michael, and try to give a perspective of what challenges we have been kind of dealing with. India has traditionally been an agrarian society, right? And obviously a lot of poverty which was attached to that. So to come out of this entire thing, I mean, the government had few challenges. One was, how do you sustain livelihood with people like farmers, and how can you improve the productivity of the farmers? Now, there are a lot of welfare schemes that India always had, right from 1960s. We had a lot of these subsidies, so-called subsidies, which were meant for the farmers, for creation of employment, for poverty alleviation, for improvement of productivity, and so on and so forth. Multiple of those. Unfortunately, because of what India is, the scale and the size and the bureaucracy, most of this money was actually not reaching the eventual beneficiary. So imagine, I am a farmer. I've been struggling to grow my crop. I need some money, right? One, I don't have access to money because I'm a farmer. There's no bank who's willing to lend money to me, right? So I go to, let's say, scrupulous money lenders and take money at a very, very high rate and then deploy that into the system. One bad year, when the rain is not happening, my entire capital is wiped out and I'm under the burden. How do you help these guys? So then subsidies used to come in. Now, if I'm supposed to receive X amount of money, I'm actually receiving only a fraction of the money. So while conceptually everything was perfect, that this is how we need to evolve, this is how we need to take care of people, it was not really happening on the ground. Primarily because of 2-3 things. One, there was no direct access to the last individual. For example, if I'm a farmer, Vishal Jain, I didn't have a bank account.
Right.
Now, if I didn't have a bank account,
Where
how
does
do I
the money
get
go?
Right.
Yeah.
So therefore, I am dependent on the intermediary to get the money. The government is going to send it to somebody, somebody is going to send it to somebody else, and eventually that person is going to take me. And all this chain, what reaches me is only a very small fraction because everybody else has taken something. Right? That was a huge problem. The second issue was in terms of just what India is all about.
But I do think it's really hard for people to conceptualize, particularly people that haven't been in India, to conceptualize just how vast it is. So tell me this though, right? I mean, I've had conversations about financial inclusion, whether it's in the Philippines, right? In Vietnam, in India, in Indonesia, all over this region for 10 years. Why is this something that's so important? Both from an economic standpoint, but also from a socioeconomic standpoint. And I mean, let's answer that first, but there's a major complexity in India as well. And that is that it's not in some ways like one big same country, right? So like if I'm in New York, sure, the people in California are different and the people in Kansas are different, but they're all speaking English, the same kind of English, right? There's no communication problem at all, right? But in India, it could be different. There's so many different languages spoken in so many different big cities, second-tier cities, third-tier cities. So how does all that work together in the context of financial inclusion? And the answer is not easy, yeah?
You're absolutely bang on, Michael. India is not just one country. I mean, it's probably 20 different countries packed into one. I mean, each region is different. They have their own. For example, what works in North India doesn't necessarily work in South India.
Right.
They have their own cultural differences.
Exactly.
They have their own nuances, right? And if you don't take care of those nuances, people will just throw you out. They
They'll
don't
just
accept
ignore you.
Absolutely. So, but I would still believe. See, you remember the Maslow's theory?
Yep.
Right? So the first thing to be taken care is the base level. Now, once that you're done, then you evolve into more nuantical or nuances thing. Unfortunately, in India, the base was still not there. The problem was still the same common problem. How do I reach you? How can I give you a bank account? How does the money reach you directly? How can you be a financially independent? Right? So that is something that we started working on now. I'm sure this nuance piece has already started kicking in. But we're happy that we've taken care of the base level. So coming back to the point I was making. So one challenge was, how does the money reach the eventual beneficiary?
Right.
That was the first challenge. The second, another issue is, and this is a common phenomenon across the globe, credit is something that drives economies. Like what you were asking me, that why are we different? The excess of credit to let's say, the rural hinterland has always been a challenge. And because they're not part of the formal economy, India is still a huge informal economy.
Right. So do people even know that credit is a choice?
Exactly.
So this is my big question. And this is what I was thinking about before you arrived today, is that there's no financial inclusion without financial literacy. And I hate throwing around buzzwords. I really do, like almost more than anything. But I was honestly thinking about it this morning. So the challenge of actually getting money to somebody in a third-tier city or the suburb of a third-tier city, right, is hard. But if they have a mobile phone and they have some amount of connectivity, the bandwidth to make that possible is not bad, right? And India's done a really good job of electrifying most of the country and giving people access to a mobile phone. I'm not saying it's 100% solved, but it's relatively solved. But if I don't know what to do with that, right? If somebody gives me a banking application or gives me an e-wallet, but I don't even know what it means, then I have a problem. But this brings up the other thing we were talking about. Again, this Maslow's hierarchy, right? So once you build the base, and that base is getting a mobile phone, getting connectivity to everybody. That's the first thing. But the second thing is, now I have to explain in a local and nuanced way what credit means. And credit in a way that's not egregious, right? It's not 25% a month. It's 4.5% a year or 5% a year. How do you do that in a country that's as vast as India? And what role does tech play? Because that's the real challenge, no?
Absolutely. And I think it's, you should be working with us, Michael.
I'm not smart enough to do what you guys do.
But you have the pulse of the problems. You know what exactly is the problem. You know exactly what, and that's what we are trying to solve today. So what did we do? So we have three problems, right? We don't have access to the direct beneficiary.
Right.
Right? We don't have presence where we can actually go in and reach these guys. And then they don't have access to the credit. So how did we solve it?
How do you solve it?
This is what is today known as the JAM Trinity.
Okay.
Right? JAM, the J stands for Jan-Dhan accounts.
What does it stand for?
It's a Hindi term. It
Okay.
means Jan-Dhan, which means People's Money Bank Account.
Got it.
It's a terminology. It's a name, branding given to the
No,
account.
but I got it. But it means removing the middleman, right? It's
Removing
your
the
money.
middleman. Yes, it
Okay,
is
go
like
ahead.
everybody common man's bank account. So
Right.
that's what the J stands for. The A stands for something called Aadhaar.
Aadhaar. Okay.
Aadhaar in English would mean a foundation.
Okay.
Which is basically the national identification program. In India,
Right.
we had very sketchy identity. For example, in US or anywhere else in the world, you will have a social security number.
Right.
Everybody knows what everybody's doing.
So we're in Thailand right now, and everything is driven off of your national ID.
Correct.
Everything. You can't get a bank account. You can't buy a car. You can't get insurance. You can't get a passport. You can't do anything. Show me like when you get pulled over by the police, they'll say, "Show me your national ID card." Same thing. Sorry. Go ahead.
Absolutely. So we never had that. So in about almost 10, 15 years back, the government finally took a call saying, no, it can't work like this. How do I know who to give money if I don't know you? Simple as that.
How do I know who you are?
Correct. So we set up this thing, something called the Aadhaar Identity Corporation, and it's a massive job they have done. Guess the number of Aadhaar cards. Everybody has a card. If I have a number, I have a card. How many Aadhaar cards India has today?
I don't know. It's got to be 1.3 billion.
It's actually 1.32 billion.
Okay.
That covers almost more than 90% of the population today.
But that means almost everybody has
Almost
one. Sorry, I
everybody
know
has
90% is a big number, but that means almost everybody has one. That's a miracle.
And the number sounds okay, but look at the scale. 1.3 billion people have been given a national identity card in the last 10, 12 years. Today, if I have an Aadhaar, I can, just like what you said, I have access to everything. I can get my passports done, the bank accounts done, all my KYCs, loans.
Is it a digital ID?
It's a digital ID. It's a numeric number, which is a digital ID based on biometric, a lot of biometric, face recognition,
Right.
and so on and so forth.
So
A lot of
stealing
tech-
it's hard?
Sorry?
Stealing it's
is
hard.
absolutely hard.
Go ahead. Okay.
Absolutely hard.
Right.
So in the JAM Trinity, Aadhaar played the key role.
What's the M?
The M is the mobile.
Okay, got it.
M
Makes
is the
sense.
mobile. Today, India has the cheapest data rates in the entire world.
It's pretty amazing, actually.
It's unbelievable. Just to give you an idea, 1 GB data will cost you about 10 baht, less than 5 baht actually.
Wow.
That's
5
it.
baht, like 15 cents.
That's it.
Yeah.
So the data, and because of that data percolation, that the cheapness of the data, it became accessible to everybody.
Right.
Today we have, I don't know, how many mobiles we have, but practically everybody is on the mobile.
Right.
There is a real estate which is available to you in somebody's hand, and he's using that very frequently.
Right.
So that disadvantage of how do you reach somebody kind of got mitigated.
Okay.
You don't need to have a physical presence.
So that's problem number 1 solved.
Absolutely.
Right? But how about the other issue? Sorry, go ahead.
Sorry, but the problem is still not solved. And coming back to the point that you said, it's also about the literacy.
Right.
So if you go to a village today, if I'm 50 years, 60 years old, I'm still not very confident using the phone.
Sure.
I'm still not very confident doing a financial transaction on the phone. Can I send you money through the phone? I'm very scared. I don't want to do it.
Yeah.
But
Where does it go? If I hit this button, where does it go,
Absolutely,
right?
Absolutely.
And
So
who
therefore,
knows?
the financial literacy becomes a key point.
Right.
Making them comfortable, making them aware of what they can, the power they have in their hand, what they can use it for. Fortunately, the new generation, even these villages, are very comfortable with the mobile phone.
Sure.
They're
The younger you
practically-
are, the more likely you are that you're mobile
Absolutely.
first for everything you do, right?
And these are the guys who are driving the change. They are the ones who are initiating and telling people that no, it's absolutely fine to buy insurance through the phone, or apply for a loan through the phone, or
Right.
you send money through the phone.
So is India making a generational bet?
It is.
Do you know what I mean? Where like they're almost saying, not purposefully and not like excluding people, but just thinking maybe, you know what, it's going to be really hard to get people like this, whatever this is, to understand how all of this complex technology works. But if we start when they're 7 or 17 or whatever it is, we're not going to even have to explain it to them because they're going to be mobile first anyway. Right? You're kind of making a generational bet. Can I ask you another question though? I've started having this thought that countries shouldn't be allowed to be more than like 10 million people. It's radical, and I only mean it to make a point. But the point I'm trying to make is that if you go to places like the UAE, it's pretty easy to have everybody do the same thing because there just aren't that many of them to convince. Singapore is maybe the perfect example of this, right? 6 million people maybe in total, 6.5 depending on whether people are immigrating or emigrating, right? So to control is maybe the wrong word, but to just convince everyone that like this is the way it is, everything's a mobile payment from now on, because of the proximity of everybody as well, it's just easier. Is there a way to break it down in India into smaller pieces and attack them in like little sectors? Do you know what I mean? As opposed to just going, here's $1.3 billion, boom, it's done. You know what I mean?
No, absolutely. But the point being that will that solve for everyone? Because like what we said, India is diverse.
Very.
So one solution probably will not kind of solve for everybody.
Absolutely.
You can't paint the
No, it's a broad brush. You can't use it.
You
Yeah.
you have to bring in nuances. The population is while being that's one thing which you kind of it kind of stops you from doing so many things. I agree. But that population is also what is driving the economy today.
Absolutely.
We are we are the largest populated country in the entire world,
Right.
which means we are also the largest market for practically every good.
I get it. So again, the reason why I brought up this small thing is just because it's easier to manage. But the benefits of having a massive population
It's
also
huge.
means that everything can exist at scale.
Yeah.
Which can't happen in Singapore.
It cannot.
Right. And nothing against Singapore. I love Singapore. I go there all the time. But it's just so different there than it is in India. Yeah.
So it's a collective thing. At one side, you have the population mass as a market. So which means you can actually afford to bring in a lot of innovative stuff, and there'll always be market for that.
Right, for
You'll
sure.
not struggle. Right. Second is the intellect capability.
Yeah.
Because generally we are pretty smart people. so the more the merrier.
Yeah.
And that collective capability is what is driving the entire innovation in what we're doing today.
So what is the impact, you think, on the economy at scale if there are more people included? Because even now, without that kind of financial inclusion, the Indian economy has been pretty dynamic for the past 20, 30 years, right? And you can see a little bit into the future. The more people that participate, it feels like the GDP growth should be much higher. You have to be a little bit careful of inflation, right? Because the more people that have more money, the higher prices could potentially edge. But then again, if you're producing at scale, the economies of scale make everything, whether they're digital products or physical products, cheaper, right? So what is the overall impact on the economy as more and more people, second tier, third tier suburbs become included?
Great question. And a lot of good examples to give you there.
Please.
With the JAM Trinity, we were able to solve the basics. Now today, when a beneficiary is supposed to be paid, he's paid directly into the bank account. There's no middleman, there's nothing. So eventually, why the money was being paid to him is actually being put to use.
Right.
So therefore, there is definitely an improvement in lifestyle, in the standard of living, in the productivities, elevation of poverty, and so on and so forth. That's on I would say on the quality of life side. The second, because of the mobile access and the financial inclusion, today people are more aware of things. So it's no longer about just receiving money and sending money. It's about investing money. It's about investing money in mutual stocks.
Yeah.
Right?
Yeah.
So today, the entire growth in mutual fund in India is happening from tier 3 and tier 4 cities.
Almost by definition, right?
Right? Because these people are new. Suddenly they have a tool in their hand which says that, listen, I have so much of money, can I put it in the stock markets?
Right.
Which yesterday they didn't even know about.
That there was a stock market.
Right? And it
Right.
has a right kind of a ripple effect. That's why the Indian markets, despite the fact that a lot of FII has moved out in the last couple of months, it hasn't had made any impact to the Indian stock market at all.
Does it change the way that cities themselves, like that geography, sorry, is a better word, grow? In the sense that if I'm living in a third tier, in the suburb of a third tier city, and I had no connectivity until, let's say, 5 or 6 years ago, I didn't even know what life in Mumbai or in Delhi or in Calcutta or in Bangalore was like, right? And now that I know, maybe I want to move into like the tech sector and go to Bangalore. Is that possible as well? Is there like this internal migration thinking, life here is great, but farming's hard? We saw this in Japan a lot. This movement to Tokyo, movement to Osaka, movement to Kobe, right? And just thinking, I don't want to farm anymore. And again, nothing against, we can't eat without farmers, right? But the point is that sometimes the kids and the grandkids just say, I want to move to the big cities. Is that also a possibility?
In fact, it's a very interesting, I'll tell you what is happening. The divide in India is massive. For example, what you see in the cities, in the metros like Delhi and Bombay is contrast to what you see in the hinterland.
Fair
Right?
enough, yeah.
Now, it was getting worse because for economic activities, people were leaving the villages and moving into the cities.
Got it.
Right? Because that's where the opportunity is. Post-COVID, everything has changed. Today, people realize they can actually sit in a very remote corner city like Agartala, right? And they do the same amount of work,
Right.
maybe better, while if they were sitting out of Mumbai. So, for example, when the COVID hit and we started working from home, but we had this huge requirement of hiring techies. We said, why? Why do we need to go to Bangalore and Bombay only? We actually went to tier 3 and tier 4 cities. People were more willing. People were more happy. They were happy with the opportunity. They didn't have to relocate.
Right.
And as a result, the rest of the cities are now growing. It's not just Delhi and Mumbai, which is rising as the economic capital.
Right.
These cities are growing now. So yes, it has a very, very profound impact in terms of everybody's life and how people work.
Why do I feel like even a small city in India is bigger than a big city in the United States? It's a high quality problem, right?
Yeah, it's true.
I think. So what is the impact on the digital economy overall of financial inclusion?
I will many facets. I'll go back to the financial services, the financial inclusion piece.
Please.
First. Like what I told you, the digital literacy is still a problem. People has to be told that, listen, you can be comfortable. How did we solve for that? We said, okay, the older generation is not very comfortable, no problem. The youngers are. And the youngers are which are doing small, let's say, entrepreneurship kind of work. Somebody has a mobile repair shop, somebody has a photocopying shop, and so on and so on, but they're happy with the mobile. So why not make them the conduit? Why, if I'm old and I'm not comfortable, that's okay. But I can go to this young chap and tell him, listen, can you do a financial transaction for me?
Right.
And that is something that we have done beautifully in India, Michael. You have to see the scale.
I'd love to.
This is something what we started calling as the banking correspondent channels.
What does that mean?
Okay, so it's like what I told you. You can have so many branches, but they will not be able to serve to everybody.
Sure.
Like, for example, my closest branch might be 200 kilometers away from where I live in the village.
Right.
Right? Now, I can't travel 200 kilometers. So what we decided as a country, as a government, the RBI, decided that let's have banking correspondents. These are individuals. They're not branches. These are individuals who be entitled and enabled to do basic banking transaction, like sending money, receiving money.
So helping people in the villages or in the little small towns do that.
Generate the statement. Do some basic kind of transaction. Not necessarily hardcore banking, but small transactions. Now, somebody doesn't need to travel 200 kilometers. He travels 200 feet, go to a mobile repair shop where the young chap is very comfortable working on the phone. He opens up an app and does the biometric, which is basically the Aadhaar identification.
Right.
And the entire transaction is done. He can collect the money, he can deposit the money, and so on and so forth.
So finance, this brings up a really good point, actually. The first time you do anything, you don't trust that it's going to work. Right? And maybe the second time you're still a little bit skeptical. And again, I'm making up the numbers, right? But the third time you're like, I don't need to go to the shop to do this, do I? Right?
True.
So what is the difference when somebody figures out that, because finance by definition, it all seems to happen in the ether, right? Like when I go to a bank these days, I almost never get cash. I just press a button, put in a code, make a transfer. I always pay by QR code. I'm almost never carrying money per se, which means like, is a central bank digital currency really necessary, or are we already there kind of thing?
True.
Right? Does it need to be on the blockchain? Maybe not, since it's all digital anyway. But my point is that once you get to that point, then you can offer a whole host of other services to somebody because now they trust it. Because by definition, that foundation you were talking about for the financial services business is all really just about, is this going to work? It's just about trust, no?
True.
Yeah.
True. So, no, absolutely fine. It opens up so many opportunities. So today, the so-called BCs, they are not just restricted to bank statements or transactions. They are the ones who are also selling insurance to the guys. So imagine I walk to a small shop to buy a shampoo.
Right.
And there I see a board which says you can do all the financial transactions with me. So I tell him, listen, I need to send so much of money to my son somewhere. I do that. Then I also see that I can apply for a loan. Oh, I have a marriage in my house. I need a gold loan. The guy will facilitate that as well. So he's become kind of a financial advisor for that small community in the village.
So are you finding this, right? Your whole business is around financial services. Yeah. And the more you can include people, the bigger that business can become. But if that business has been up until now, let's say, right? And not just yours, but plenty of other financial services companies have been focused on people that already understand the financial services system. There have been a whole lot of products developed for those people. But once you start dealing with people that haven't been included, what does it mean for product innovation? Does that make sense?
Absolutely.
Talk to me.
And this is where your earlier point comes in, that will the same thing apply to everybody else? No. The kind of products that run in the urban markets, especially let's say on the insurance side, doesn't really kick off in the rural, in the hinterlands. So we have devised something called sachet products.
Sachet. This is a long time being built in India, right?
It has.
Because this started with what? Procter and Gamble.
Absolutely.
I think.
They
Back in the old
started
days, shampoo.
The shampoo. That's why these financial products are called the sachet products. P&G started doing this.
I like it.
Right? With a very small packs of shampoos. Okay, you can't buy the entire bottle. Buy a small pack for $1.
Right.
Today, we are doing the same thing in insurance. So, for example, it is a health insurance, or let's say your shop protection. You don't need to really pay the X amount of money. I mean, these are very small small ticket kind of cases, and these work very, very well in the market.
So insurance is actually really interesting. Are you in the insurance business as well?
We are.
Okay, so this is fascinating now, right? Because you've had big businesses built around new ways to distribute insurance. And remember, about 5 minutes ago, I talked about this idea of trust, right? And also, if I can trust you to take money from here and send it to my son, and that works over time, I'm like, what else can you do for me? So now if you offer me an insurance product, again, it could just be a sachet size or style insurance product. But again, once a claim gets paid, now I need more insurance, right? And there's this virtuous circle, it seems to me. I'm not financially included. So just work with me on this for a second and tell me where I'm wrong, yeah? I'm not financially included. But then I am, right? Maybe my grandson teaches me or my nephew teaches me like how to use my mobile phone to do bank transfers. And it feels like it's working. Then I think if I had a little bit more money, I could expand my business, whatever that business is. I take out a loan and the interest rates are not egregious. And then I'm thinking, wait, my income is now improving. I can live in a better place. Maybe I can buy a 2-wheel vehicle. But what if something bad happens to that? How do I protect myself? So now I'm talking about protection. Now I need insurance. And once that wheel starts spinning, the possibilities seem almost endless for serving financial products to people that were unservable before. Does that make sense?
That's exactly what financial inclusion is all about. Absolutely.
But is it happening?
It is happening. Oh, it's happening. It's happening at a scale we have never seen before.
Really?
I'll give you an example. Look at the credit side.
Yeah.
When it comes to credit, I mean, there are 2-3 prerequisites that you have. One is you should exactly know who the customer is.
Right.
Who am I giving money to? If I don't know you, how can I money give to me?
Exactly.
The second problem has always been, on what basis do I judge whether you are entitled for some amount of money or not? I need some data.
Right.
That data could be your credit score, your bureau score, that could be your bank statement, could be something else, income statement. The third and the biggest challenge is in case you default, how do I collect back from you?
Right.
Right? Now, this is usually the biggest challenge that you have with credit. Now, apply this to tier 3, tier 4, the rural market, right? You have people who don't have proper data.
So that's what I was, go ahead. That's what I was going to ask you about. Yeah.
So you can't really assess them. Second is, how do you reach out to him and say that, listen, I can give you money if you want money. And the third, the biggest problem is, in case I default, how will I recover from you?
Right.
Right? Because the distance is so large, just to collect a small amount of money, you can't really send somebody and say, listen, pay.
So how do you deal with this alternative data?
So what we have done, and again, one was the excess problem got solved because of the mobile phones. Today, because he has a mobile phone,
Right.
he can put an app of mine, right? And he can...
So you can see all of his
He
transactions.
can see
and stuff like
transaction,
that.
he can apply, and so on and so forth.
Right.
There are a lot of alternate data that has started getting generated.
Okay.
It's not necessarily the so-called conventional bureau data, right? For example, if my usage on the app, what kind of time that I'm spending on the social media,
Right.
Right? So
Right.
this is what we call the social profiling. That is something which has really come out with a lot of AI and ML which has been used into this.
Somebody once told me that you could tell like how trustworthy somebody was by like how often they texted their mother or their brother or their sister, right? Like if they were in constant communication with their family, whatever that means, that they were probably more trustworthy than somebody who was isolated. So
True.
this is really interesting the way this alternative data works, yeah?
I'll give you another example of very interesting on the alternate data side. So I used to work with one of the largest UPI organizations in the country.
So UPI is the Unified Payment Interface.
That allows you to just scan a QR and pay whoever.
But I mean, I want to be clear about UPI, right? Because for me, it's so transformational. It really means that if you have a mobile device and a business anywhere in the country, I mean, you can be the furthest away from the furthest away place, you can still make a payment using UPI. That's transformational for India.
UPI has transformed the country completely.
Completely.
15 years back, when you used to get paid as salary, the first thing you would do is go to the ATM, draw cash, because you have to make the spends. You have to pay your driver, you have to pay
Right.
your gardener, you have to pay for fuel, for food, everything.
Right. Everything.
It was a cash economy. Today, Michael, I don't know when was the last time you visited India, but come to India now. Nobody draws cash.
Why
There
would
is
you?
no cash.
There is no cash. It doesn't mean anything.
You go
right?
to a street vendor to buy tomatoes, you pay by UPI.
Right.
You go to a fancy restaurant for dinner, you pay by UPI.
So just so you know, I get coffee every single morning across the street. It costs 30 baht. So it's $1. And I pay by QR code. That guy has a
beautiful.
little laminated card in front of his stand, and I pay by QR code. Can I ask you this? Are you seeing, and this is a little bit meta, but are you seeing the velocity of money increase in India because so many more people are included, which means that there's more payments getting made, more credit being accessed, and that means that the velocity of money that's in the economy is moving faster? Are you seeing this in the data?
It is, absolutely. And it is reflecting in every economic parameter. If you see, you look at the stock markets, we've been on a up since for last almost 2, 3, 4 years now, right? In 2008, the market was at roughly about 8,000. Today we're at 80,000. Wow. And it's growing, and it's not one is economically, fundamentally, everybody's strong. So you look at the quarterly results, you look at the yearly results, that is what's driving the market. Second is the infusion of capital, like what I said. More and more people are today investing into the markets. So there's large inflow of money which is coming and it's accessible. The IPO market, the so-called
public
IPO
offering,
markets, today is booming. I'll give you a small example. There's something called SME IPOs in India today. So one is a large stock market, of course, but that's not accessible to everybody. If I'm a small, let's say mid-sized company of 100 crores, 200 crores, I can't really go to the stock exchange and say, list me. No. So we started something called SME IPO, which is entitling these small companies to there's a small warehouse kind of a company in Delhi which only deals in auto parts.
Right.
The guy has some turnover of some 50 crores. He applied for an IPO for some 10 crores. He got subscribed to almost about 1,500 crores.
Wow.
I mean, that's the kind of money which is coming into the market. And it's because, yes, absolutely, people have access.
So I talk about this a lot too, but I'm always interested in like second order and third order impact, right? So the first order impact is just on the day-to-day lives of people. I now have access to credit. But what is the impact you think on like the startup ecosystem? Because again, a lot of the startup founders that I talk to, particularly guys and gals that have been in the United States, been educated in the US, and then come home to India because they see, like you said, just a massive amount of opportunity. But it also must mean that some of that money that's now faster in velocity is now moving into venture capital, but it also allows them to build solutions for a wider swath of people that wouldn't have been able to have access to that technology before. Is that happening as well?
I'll give you an example of credit again. See, how typically it is tiered in the country is on the top notch, you will have the banks. So let's say there's a pyramid. On the top notch, you have a bank. The banks will offer the most cheapest rates, but they are very stringent on the credit side. They're very stringent in terms of selecting the customer, right? They don't want to really heavily regulate it. The next tier is something what we call as the NBFCs, the non-banking financial corporations. So they charge a little higher, their policy will be a little more relaxed, but they will still have limited reach. They will not become very unconventional and become innovative overnight. The third is what the fintechs have now filled in people like us. I was giving example of the UPI company that I was working with. What did we do? Because it was a UPI platform, so we knew who's spending what and where.
Right.
So for example, the company knew where Vishal Jain spends money. They don't know how much money Vishal Jain earns.
Right.
But they know how much Vishal Jain spends.
Right.
So much on fuel, so much on haircuts, so much on dining, and so much and so on. Based on that, and we were large fintech, we were able to create an imputed income model.
Sure, you can back into that.
And we said that if I'm able to spend so much, I must be earning so much.
Right. If the average person, no matter how much money they make, spends, I'm making up a number like 10% on housing.
True.
Well, then I can just do the math into what your income is.
True.
Right.
And based on that imputed model, now that became the alternate data. To underwrite somebody saying that, okay, I know you don't have an income statement, I don't know you have an ITR, but I know your behavior on a platform. I will give you 100,000 rupees for so much amount. So that is how the fintechs are solving for the credit issue. But that is on the alternate data side. You still need the access. You still need, in case somebody goes and defaults, what happens then?
Yeah.
So that is something that we're trying to solve now. In MBS, where the company that we are working with, or I work with, that is something that we're trying to solve by bringing not just the digital, but also plugging a physical angle to this. Now, Michael, look at this. Life is coming full circle now. We were purely physical earlier, right? And it had its own challenges. And then we said, oh, digital is the way. We can reach everyone. And that's what we started doing. We also realized digital has its own challenges.
It does.
It has its own limitations in terms of what you can do. For example, let's say Vishal Jain had borrowed some X amount of money.
Right.
Today, for whatever reason, because of inability to pay or intent to pay, I'm not paying.
Right.
So I get call from the bank saying, listen, Vishal Jain, pay. I said, okay, I'll pay. And I just put down the phone. Next time when the bank calls, I don't pick up the phone.
You just don't pick it up.
I just block the number.
Right.
Now, what does a bank do?
Right.
That is where the digital outreach becomes limited. Now you still need a physical leg, somebody to go and meet Vishal Jain in his office or his home and say, listen, can we work out a deal for you? Can we do something for you?
And we've seen precedent for this as well. So when Amazon first started in the United States 20-something years ago, it was a purely digital business. And what they realized is that if they built these physical distribution centers close enough to their customers all over the country, that they could give them better service, better returns, but the same thing you're talking about, that having a digital-only business that deals with humans, which are physical entities, is never going to work. Everything has to be hybrid. And you're right. If you have a physical-only business, by definition, your largest piece of investment, once you figure it out, is going to be in digital because it doesn't exist yet. But once you do that, you realize, okay, now we're bumping up against the limitations. Now let's build out a modern version of our physical business, which augments and supplements the digital business that we spent the last 5 or 6 years building.
Yeah. So now from physical to digital, and now we're moving into what we call as the phygital model.
Exactly.
That's what we're doing today. So you have the digital capabilities, which is allowing to do so many things, but you also add the physical element to that, and therefore you're able to bridge the shortcomings. I'll give you another example. Look at how the KYC is done today. Earlier, the know your customer piece in India,
Right.
I mean, it used to be face to face. Right? Somebody would meet you, get the document signed in front of
Take
you,
a picture of
verify,
you.
take photographs. Today, when I have to open a bank account, I do none of this. Right? I just sit on my laptop, do the basic information feeding. There's an officer of the bank who comes on the screen on the other side, does my KYC then and there. I show him my PAN card. They verify the PAN card, and my account is opened in 5 minutes.
Right.
Flat.
That's the way it should be.
I was telling you, I was in Europe for some time, and I was amazed that opening a bank account took 2.5 months.
In Europe, right?
As a practice, not as an exception.
Right, as a practice.
rule.
And everybody thought that was okay. Right?
And
It's
in
not
India,
okay.
it takes 5 minutes.
Right,
You
it's
open
not-
the bank account, that's it. And it doesn't mean that you're not regulated. Probably we are the most heavily regulated entities. The regulator today, RBI,
Right.
is amazing, the kind of work they do. And they're making sure that no compliances are kind of not done. And it's the technology is changing everything. However, it's a great feature to have. But what if the internet connection is not working? What if the person is not able to show the card properly? The KYC is not done. That is where, again, the physical legs come into the picture. So you club the video or the digital KYC with the physical KYC, that's what we also do. And you're able to serve 100% of the population. It's a great evolution, I think, that is happening today in the country. It's a very, very exciting time, Michael, very exciting.
That's the way I want to end. Vishal Jain, the CEO of Manipal Business Solutions. I learned so much today. I cannot thank you enough for coming and doing this.
Well, it was my pleasure, Michael. Thank you so much for inviting me.
This was awesome.
Thank you.